Good evening, esteemed colleagues. As always, it's Sunday, Den Strelkov, and our project, ForexTimes. We will consider the probable movement of trading instruments for the forthcoming trading week. We will look at the euro, gold, and the SP 500 index. Esteemed colleagues, as always, I invite you to join the ForexTimes community. Unique forecasts are given according to the Czech Commodity Exchange. There will be 18 forecasts throughout the month based on Ralph Elliott's wave theory. The number of trading signals will soon dramatically increase, as will their quality, and I would also like to remind you about the service of automatic trades copying. Esteemed colleagues, you can connect to automatic trades copying, also trade on your account independently while copying trades automatically. This way you will diversify your risks, your trading risks. Well then, let's go. Euro versus the US dollar. Esteemed colleagues, first we will refer to the data from the Commodity Futures Trading Commission, and we'll see an increase in buyers by 231%. You'll think, wow, that's a lot. But believe me, at this moment, buyers and sellers are in equilibrium. Specifically, half of the professionals at the Chicago Commodity Exchange are buying and half are selling. Therefore, at this Commodity Futures Trading Commission, we will not look together at this moment. However, let's refer to you, my apologies, to the data on monthly options contracts, and we'll see that we started with a strong resistance range of hedge and premium hedge level. There are quite large accumulations of pure options contracts call amounting to 314 million, 342 million, and previously it was still 433 million. And before that, 183 and 171 million. Esteemed colleagues, this range, on my view, is very strong and attracts professionals from the Chicago Commodity Exchange. Therefore, we will only consider purchases. And now, let's see how we're going to do this with you. And we do this on the basis that most likely at this moment, we have a primary diagonal extended triangle. Esteemed colleagues in wave A or in wave O, it's absolutely not important. Next, at this moment, wave B has already been formed, or the formation of wave B has not been completed yet. And later we go to buy in wave C. Namely, we go there in that range in which I spoke, even the level approximately 1.88, 1.092, 1.088, 1.092. This is a very good target range for purchases. Esteemed colleagues, as I would recommend, buy either with deferred orders, buy stop above the local maximum, stop loss level below the local minimum, or wait for the formation of another zigzag and already from the range of 50% or 61.8 by the grid. Make a decision about entering the market for purchase, or again, wait for impulsive movement, correction, and with deferred orders, buy to make market entry for purchase. So, esteemed colleagues, I told you how we enter the market and I told you the target range. Let's go further. Gold, about gold, there are even 3 options, 2 options for buying, 1 option for selling. Now I will tell about all 3 options and then we will think about how to act. Firstly, let's immediately turn to the Trading Commodity Futures Commission data and see a 1% increase in buyers, a 4% increase in capitalization. We saw this from Wednesday until Tuesday's evening of the current trading week. During this range, our money supply increased to 398,851,000. There is a 1% increase in buyers, but unfortunately, on Wednesday, Thursday, and Friday, we see this growth. This growth is probably telling us that the increase in buyers and the increase in the money supply has already worked for itself. What should be said about it? Let's see the first option. The first option is the formation of an initial diagonal triangle, 1, 2, 3, 4, 5 in wave A. Then we have a zigzag corrective wave B, and now we are looking for sales in wave C. A nice good option, a wonderful one. We remember this first selling option in wave C. The other option, dear colleagues, is that gold drop began with a zigzag. Thus, this zigzag could be wave A. After that, the corrective wave B. And the diagonal triangle will not be initial, but rather an ending diagonal triangle in wave C. Therefore, we see the beginning of the impulsive movement. wave 1, 2, 3, likely formation of wave 4, then the fifth wave, then correction, and only after this we can talk about something. So, dear colleagues, if we see an obvious zigzag in wave 4, which will not overlap with the peak of the first wave and the price flight after this up, nothing is recommended to do in this impulse. But there is a big problem in wave 4. If we even see that wave 4 overlaps with wave 1, then we can form an initial expanding diagonal at this moment. So those who are looking for purchases here, we rest while the initial expanding diagonal triangle is being formed. Then we get a correction, and only after that, we are already making some decisions about entering the market for purchase. But how can we sell it? How can we trade for sale if we think it is precisely an initial diagonal triangle, then correction in wave B, and still want to see the sale? We need to see a more obvious impulse, just a more obvious impulse, after which a zigzag in the form of correction and trade. Dear colleagues, only by deferred orders, not by any means enter the market at the current price. We place only deferred orders as if we are really right and the price will start to fall down in wave C, then deferred orders will work and we will get a profit. If we are wrong and will form an initial expanded diagonal, or this will be 1, 2, 3, 4, 5. By the way, in wave 4, there cannot be an impulse here. If there will be a wave 4, then here we will see an obvious zigzag corrective movement. If we see an obvious corrective movement, of course, there cannot be any entries into the market for sale. But if we see an impulse here, then only after a more obvious impulse and correction, we make a decision about entering the market for sale. Only in this way, dear colleagues, therefore, for the upcoming trading week, either we all week with you, we just observe how the impulse and correction are formed. Only after this, we will make some decisions about entering the market, or an initial expanding diagonal triangle is formed, which is an initial impulse after this correction. But again, all this will take up a whole week. Or if we see a pure impulse in the second half of the trading week after correction, we can make a decision about placing deferred orders for sale. I hope, dear colleagues, it was clear here. I want to note right away that for the second week now, the S&P 500 index has shown a reduction in buyers according to the Commodity Futures Trading Commission data, but the market continues to grow. We have formed quite a strong divergence. Moreover, if we turn to the daily time frame, we will see a pin bar that can be executed quite clearly. There are three options to approach it: through a deferred order below the September minimum, through an immediate market entry for sale, or we wait for a daily pin bar to form after correction. Then we make a decision about entering the market for sale. There are these three variants. The idea for the strategy on the sale order at the moment is very simple. We have one movement, there's a second movement, and we lack one more downward movement. Moreover, as we have a divergence per the Commodity Futures Trading Commission data and the market data, the commission shows us that buyers are leaving the market. The price has been rising for the second week, and the growth occurs on declining volume, which is very good for entering the market for sale. Please pay attention to the hedge level, the HDV level. This is our maximum opened interest according to the put option contracts. There's a huge accumulation of put options contracts totaling around $12 billion. I went to the Chicago Mercantile Exchange website, sat down and calculated. Sure enough, if we look at the weekly options contracts, we will see what kind of accumulations they are. Huge accumulations of put options contracts are quite far from the price, and small accumulations are over the price. If we start to calculate, I estimate about $150 billion here. Can you imagine the amount of more than $100 billion in put option contracts? It's a lot, and professionals believe that selling this trading instrument is currently the most effective strategy. Thank you very much, dear colleagues, for listening to me. Please join the Forex Times community. In the upcoming trading week, we will be opening trades based on the Swiss franc, the Japanese yen, and the Canadian dollar. On the current trading week, we sold the Canadian dollar and made money. Please join the Forex Times community. Don't miss the entries, don't miss the trading signals, and subscribe to automatic deal copying. Come join us. We do everything for you. Thank you all for today and goodbye to everyone.